Okay, the debate over the $31.4 trillion debt ceiling continues to loom over the U.S. government. And on this week's Bidenomics, senior columnist Rick Newman takes a look at where that number is headed and what it means. Rick, how big is that number going to get as we move forward? Good to see you, sir.
$31 trillion is no big deal, at least if you look at what's coming down the road. So the Congressional Budget Office this week updated its outlook for the government and for the economy over the next 10 years. So 10 years from now, Dave, the federal debt is not going to be $31 trillion. It's going to be $51 trillion. We're going to add another $20 trillion of debt in just a decade. We've got some charts on the website in my story that show how that has mushroomed over time. But the news in the CBO's point of view is sort of uniformly terrible. Medicare is going to start running short of money in 2028. Social Security is going to start running short of money in 2030. Those numbers are now inside a decade. I mean, we've been hearing that this is somewhere off in the future for a long time now, but it's actually getting pretty close. And at the same time, we're having this argument about should Congress do anything at all about Social Security and Medicare costs right now as part of a deal to raise the debt ceiling, which needs to be done by the summer. And of course, that is not going to happen this year. But it just makes you realize that all this talk about the debt ceiling in 2023, it's really just a sideshow. Nobody's talking about the real problem, which is that this debt is going way, way higher.
Yeah, Rick, talk a little bit more about the exact problems that this could potentially cause, because you're right, no one in D.C., at least at this point, seems to really care about it.
That's right, because it's not a crisis. Financial markets, and there have been economists, remember Dr. Doom Rubini? He and others, 10 years ago, they were saying, we're going to have a debt crisis. Remember, the bond vigilantes were not going to allow the debt to get this high. Well, the bond vigilantes have allowed the debt to get this high. We've seen no adverse reaction in financial markets. And this is not going to get addressed until there is an adverse reaction in financial markets. Honestly, nobody knows when that's going to happen. It was supposed to have happened by now, according to many people, and it hasn't. The basic problems here, in general, we just get away with spending a lot more than we take in tax revenue because of, the United States has special advantages. The dollar is the world's reserve currency. Issuing debt has been really cheap when interest rates were low. What's going to happen in the future is the big spending programs. If you just look at the big ones, Social Security and Medicare are just going to get more and more expensive. There's going to be less revenue coming in to cover those costs. That's simply because of an aging population. The cost of health care is going up by more than overall inflation. There are ways to deal with this. When we do have to deal with it, there are a lot of plans for what you have to do, but they're going to be politically unpopular. So we're not going to do anything. Congress and Washington are just not going to do anything about this until there's no other choice.
All right, Rick, it's a little bit concerning, at least from my end, but you're right. D.C. just doesn't seem to care at this point. You read Rick's Bidenomics column on yahoofinance.com. Rick, thanks so much. Have a good weekend.
Bye, guys.